Here is my bullish case theory on why ORGN Materials stock can easily 10x in the near future. ORGN Materials, located in West Sacramento and trading under the ticker symbol ORGN, is the world's leading carbon-negative materials company. The mission of ORGN is to help the world make the transition to sustainable materials. ORGN has spent the last 10 years developing a platform for converting carbon from inexpensive, abundant non-food biomass like sustainable wood wastes into valuable commodities, while also absorbing carbon. With a $1 trillion potential market, ORGN's proprietary technology platform can help change the production of a wide range of end products, including clothes, textiles, plastics, packaging, automobile parts, tires, carpeting, toys, and more. Furthermore, ORGN's technology platform is projected to provide pricing that is largely independent of the petroleum supply chain, which is more volatile than supply chains based on sustainable wood wastes. A growing number of large global customers and investors back ORGN's revolutionary drop in core technology, economics, and carbon footprint. ORGN Materials went public on June 25 following the approval of its merger with Artius acquisition. Despite a flurry of new client updates and increased transparency that have dramatically improved fundamentals, ORGN has remained stuck around the $7 mark with a market cap of just $1 billion. I still believe the company has a lot of room to grow in the new ESG-focused world. In this video, I'll break down the latest ORGN Materials Q3 financial report and highlight the reasons why you should consider investing in ORGN company now. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now, subscribe to our channel, and click the notification bell to be notified when new videos are released. In November 2021, ORGN released its Q3 financial report, where management explained their plans in more detail and gave an update on the business. Here are some of the key company Q3 highlights. ORGN Materials boosted the value of signed offtake agreements and capacity reservations to $4.2 billion, up from $3.5 billion in August. Additionally, the company established and expanded new and existing partnerships and customer relationships, including the following. Partnership with Colin Industries on the industrialization of advanced carbon-negative chemicals and materials. Partnership with Drive Plus, an automotive supplier platform that works closely with Drive Sustainability, a group of 11 of the world's leading automakers, including Volkswagen, Daimler, Ford, Stellantis, and Toyota Motor Europe, to further develop sustainability throughout the automotive supply chain. Partnership with the Alliance to End Plastic Waste, a group of industry experts from across the plastics value chain who are working together to create, launch, and scale solutions to assist the environment eliminate plastic waste. These collaborations build on ORGN's existing partnerships and client ties, which include Danone, Nestle Waters, PepsiCo, Ford Motor Company, Mitsubishi Gas Chemical, PrimaLoft, and Solvay, among others. Financing and construction updates for ORGN 1 and ORGN 2. ORGN has modified its initial payment schedule for ORGN 1 after incorporating extensive feedback from equipment suppliers and contractors, while upholding the ORGN 1 capital budget and schedule, since selecting Worley Limited as an engineering partner in Q3 2021. ORGN also reaffirms the previously announced ORGN 2 capital budget and development schedule. Leading financial institutions with experience financing similar-sized capital projects have confirmed to the company that its financing assumptions for ORGN 2 are fair and achievable. ORGN reiterates its belief that the capital projects for ORGN 1 and ORGN 2 can be completely funded using existing cash on hand and previously disclosed traditional project financing sources. Despite the fact that capital expenditures will be incurred later than expected, ORGN 1 is still on target to be completed by the end of 2022. Lifting and installation of previously constructed critical production modules was completed in October 2021, 6 months ahead of schedule, according to the company's April 2021 plan. ORGN anticipates starting piping fabrication by the end of Q1 2022, 3 months earlier than its previous estimate of the end of Q2 2022. Furthermore, the installation of the in-con evaporator module is projected to be completed by the end of Q4 2021, 3 months ahead of schedule, as the company had previously anticipated receiving the module by the end of Q1 2022. Similarly, ORGN 2 is expected to be completed by the middle of 2025. Worley has been named as the company's FEL1 engineering partner, as previously announced. ORGN is also working with Worley, Deloitte Consulting, and Fisher International to choose the site for ORGN 2, which the company plans to choose by the end of 2021 and announce in Q1 2022, as previously stated. The company has narrowed its search to 3 locations for final due diligence and discussions, with an option to purchase one of them. As the planning for ORGN 2 progresses, ORGN continues to attract additional talent for its engineering and site selection project management teams. Third quarter 2021 results. As of September 30, 2021, cash equivalents, and marketable securities totaled $460 million. Operating expenses were $7.1 million in the third quarter, up from $2 million the year before. The third quarter's adjusted EBITDA loss was $5.7 million, compared to a loss of $1.9 million the year before. For the third quarter, net income was $27.9 million, compared to a net loss of $3.1 million in the previous year. As of September 30, 2021, there were 136.8 million shares outstanding, excluding 4.5 million shares held by a single stockholder that are susceptible to forfeiture if share price performance targets. Outlook for the entire year of 2021. The company is retaining its previous projection for adjusted EBITDA loss based on current business conditions, business trends, and other variables, but it is changing its capital investment outlook and now expects a loss of up to $25 million in adjusted EBITDA is expected, which is in line with previous projections. Due to the modification of the payment schedule since selecting an engineering partner, capital spending is estimated to be around $4 to $5 million, down from an earlier forecast of up to $111 million. The schedules for both ORGN 1 and 2 construction, as well as overall capital expenditures, remain on schedule. We continue to make progress on our mission to enable the world's transition to sustainable materials and are pleased to have completed the installation of the key production modules at ORGN 1 6 months ahead of the plan we announced in April 2021, said Rich Riley, the company's co-chief executive officer. Customer demand continues high as the globe advances more aggressively toward a zero-carbon future, and our efforts to commercialize the business have resulted in additional offtake agreements and capacity reservations, totaling $4.2 billion from our customers and partners. This represents a more than 300% growth since we announced our intention to go public in February 2021. We're excited to share news of our recent strategic partnership with Kalon Industries, Inc., a global leader in chemicals and materials, as well as our sustainability partnership with the Drive Plus Network, which includes 11 of the world's largest automakers, working to accelerate the auto industry's decarbonization. We're well capitalized, on schedule, and on plan to finish ORGN 1 by the end of 2022 and ORGN 2 by the middle of 2025. ORGN also has top-notch professionals at all levels of the organization. Founder and co-CEO John Bissell has overseen the business since 2008 after earning a degree in chemical engineering from the University of California, Davis. Co-CEO Rich Riley also brings serious leadership credentials to the table, having been CEO of music recognition technology company Shazam Entertainment, which was sold to Apple in 2018 for $400 million while under his leadership. I have no doubt that ORGN will be the dominant player in the ESG plastic area after investigating both ORGN and its competitors Danimer Scientific and PureCycle. However, there is one key impediment to Danimer's products' widespread adoption: the cost of feedstock. Canola oil, Danimer's feedstock, is an extremely expensive and volatile commodity that is also utilized for a variety of other applications, such as cooking. Due to significant demand for the product from all around the world due to food shortages, canola futures recently changed hands at over $550 per ton, a record high level in 13 years. That is the problem with using a food product to make plastics. There is no guarantee of a consistent supply, and prices could spike at any time. PureCycle, ORGN's other major competitor, charges roughly $1 per pound for its plastic, whereas ORGN charges only 29 cents per pound for its first commercial-scale plant, giving it a significant price edge over the competition. ORGN is able to achieve contribution margins of approximately 60% despite its low pricing. While biodegradability is crucial in the long term, I believe that pricing, particularly for larger customers who sell billions of bottles, containers, and other items, will drive initial adoption of environmentally friendly plastics. ORGN's abundant and low-cost pulpwood feedstock, will enable them to continue their leadership position in this crucial area. If ORGN achieves its bullish revenue estimates, it should generate $3.3 billion in revenue in 2027, representing a 140% increase in value based on the same multiples. This implies ORGN gets moderately better price due to strong demand for carbon-negative products, as well as the addition of 2 trains per facility, increased production. I believe these price forecasts are actually fairly cautious in the long term. If ORGN is successful in replacing a significant amount of plastic, its value will be evaluated in the tens of billions, if not hundreds of billions. These are the kinds of valuations that today's oil behemoths, such as Exxon and Chevron, are obtaining. Due to a large cash reserve and billions in demand from clients, I believe there is very minimal danger in the near term for ORGN 1 and 2. The company indicated that they are presently selecting sites for ORGN 2 and that orders for ORGN 3 are currently being taken. During the business's Q3 earnings conference call, Goldman Sachs analyst Emily Kacken asked if there are any scenarios that the company sees right now where ORGN 1 could start up ahead of time. John Bissell responds, "I believe what we're looking at is, even though we've met a couple of milestones early, we've got the modules lifted and in place for our way. We're looking forward to it, and we'll keep pushing through the winter. On that project, I believe we're making great progress. We want to be cautious, and I don't think we're ready to claim we'll be delivering early on ORGN 1 at this moment. But we truly believe that by getting some of these milestones out of the way, it just removes a lot of the risk out of it, and it just makes us feel really confident that we'll be able to deliver it on time." This response leads me to assume that in the near future, there may be a situation in which ORGN 1 begins operations well ahead of plan, but the firm is being conservative in limiting investor expectations, which is the appropriate thing to do. When it comes to valuation, ORGN looks downright cheap at $7.63 as at the time of making this video. Adjusted for cash, the company's enterprise value is just roughly $280 million or 1x expected EBITDA in 2026. What is a reasonable price? Other innovators like Tesla traded more than 20 times EBITDA in 2026. Nestoids, a Finnish biodiesel company that creates renewable diesel from waste products, is another counterpart. That Helsinki-listed stock used to be just a few euros, but it now trades near 50 euros and has a market capitalization of 37 billion euros, which is equivalent to $43 billion. Based on these comparisons, the stock might someday be valued more than $100 if the company performs as projected. While that price may appear expensive, some argue that ORGN is actually worth even more. Craig-Hallum analyst Eric Stein stated in a recent note that his bull case is $22 per share over time, and sees additional upside to $100+ per share given the demand outlook and a value proposition, which does not require any change from plastics materials suppliers or consumers. All these reasons are why I'm extremely bullish on ORGN stock. Remember, I'm not a financial advisor. You should do your own due diligence before investing in any stock. So there you have it. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.